Hello traders, Gary Wagner here, just about 1:30 in Honolulu, 6:30 in New York. It is Thursday, last day of the month, November 30th, 2017, and this is the Daily Report for Gold and Silver. Now, for a second day in a row, we have had equities running wild to the upside and downside pressure in the precious metals markets. Gold trading lower on the day, closing at $1278.20. Silver closing in essence unchanged at $16.48, and that is well off of the lows that were achieved this morning. And the dollar nominally lower, down about 0.1% at 92.95. On the flip side of the coin, we had the Dow close at an all-time record high, up 331 points, 24,272. S&P also closing at an all-time record high, up 21 points at 2647. And although the NASDAQ did not close at a record high, it closed in record territory at 6873. Traders, now for the second day in a row, we have seen gold prices succumb to some pretty strong bearish pressure, moving the precious metal pricing down considerably. Of course, yesterday we noted the fact that the downside move that we witnessed actually pushed it back below its 50-day moving average, and that short-term moving average is an important one. The fact that it broke below that, to me, is significant. But today's move on a technical basis, in terms of a longer-term trend line support, we might have in fact broken below that. We can currently see $1277.50. That puts gold down about $8.70 on the day. And the key with this is if we put in a long-standing trend line, looking at these bottoms that came in July, and then kind of matching them almost along the 200-day moving average. And if we put that in there, what we see is as follows: that today's price action, as well as current pricing and the close, is just below this support line. On a technical basis, at least, is a pretty critical level because we've been able to manage a price point above that. Now, the real test of the tape, of course, is this 200-day moving average. And as long as we remain above that, even though we are seeing the market under pressure, we're seeing very, very modest gains, the question is, can it come out of this narrow defined range that gold seems to be stuck in? I read an article on the Reuter's news service, and they brought up an interesting fact that in terms of the market being range bound, this narrow defined range is actually the narrowest range gold has traded in the last 12 years. And that's an important statement. It tells you that neither the bulls nor the bears have the ability to move the needle in any effective way to really take it above resistance or below support. And traders, although I have seen quite a few analysts calling for a upside spike in silver pricing, when we simply look at the technical indicators where the price point is in relation to that, I do not draw the same conclusion. First of all, one of the unique things or differential things about gold when we look at it compared to silver is the fact that this is our 200-day moving average and our 50-day moving average is here. And we can see, A, that it's not only trading below the 50-day, but also the 200-day. The second thing that is critically important is we can look back at the beginning of November, in which the 50-day moving average, which was just slightly above the 200-day moving average, actually crossed below it. We know that this is called a dead cross. A bullish cross is when the opposite happens and you get the short-term crossing above the long-term moving average. But we're getting the opposite of that. And when we look at price action since the cross came in, which is right here, we can see that although it attempted to take and move above both the 50 and 200-day moving average, the period of 1 day before it broke back below both, it attempted an unsuccessful climb back. You can see how it stalled right here at the 200-day, and we've had substantial price declines over the last 3 days, with silver trading at $16.46, off about 0.6%. And traders, you would have to be sitting under a rock to be unaware of what has been affecting gold and silver pricing in such a negative way, and that is the incredible risk on environment that has been a direct result of equities continuing to rage, continuing to create new record highs almost weekly. And the one thing that we can say, this is a weekly chart on the NASDAQ Composite, although it is slightly lower on the week as of now, it did make a higher high, a new all-time record high on the week, and is still trading right around the closing price of last week's close, which means that we could see this turn green tomorrow to end the week on a very positive note. But in any case, we are still in an incredible market with some softening in the NASDAQ. The same cannot be said when we look at either the industrials or the Standard & Poor's. Take example, first of all, the Standard & Poor's. I've just pulled up our weekly chart. You can see that without a question of a doubt, not only are we at a new point, but we are going to close at a new all-time record high. We are just off of the all-time record high, which was achieved earlier this week. But this was a really dramatic move to the upside, considering that the market had been trading sideways pretty much for the last month as they awaited more economic data, word from the Fed, and whether or not there will actually be some sort of tax relief or a tax cut that will go to vote, I believe, later on next week. And traders, lastly, there's the darling of the U.S. equities markets, and it is the old standby Dow Jones Industrial Average. We can see this tremendous price increase. This is the beginning of the year right in here. And think about it. Towards the end of last year, pricing on the Dow was really ceiling bound, in which the real market needed to take out was 20,000. Well, we're past 24,000. And when we consider candle size, and remember that the candle size on a green candle represents where the market opened on the bottom and where it closed, and that gives us the true range of the week because we're really taking out the highs and the lows. After having the market moving sideways, as all of the equities did, look at the size of the move we have seen this week, with 300 points of upside action coming in today. Traders, until we get some solid information and conclusion as to what's going to happen with the tax cut vote that's coming up, how that will affect Americans, and if they can pass it, which it seems as though there is at least a decent likelihood that some sort of bill will get passed, then we'll have a better indication of where U.S. equities are going to go from here and the precious metals markets as well. Traders, there's absolutely no doubt, as long as U.S. equities continue to break records, to run to new record highs, we could see continued pressure in the precious metals market, safe haven assets, so to speak, such as gold. The things that we want to be aware of and look for over the next couple of days into next week is what happens with the tax bill and tax cut, the proposed tax cut. Because if it is implemented, we could see a major burst or continuation of the equities rally, and if they run into some sort of snafu, the opposite would happen. I think we'd have a very bearish effect on the dollar, and we'd see a dynamic rally in gold. We'll have to see how that turns out. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow for the weekly wrap-up and review. Bye-bye.